When Russia invaded Ukraine, it was believed to have assets worth around $300 billion inside Russia, mostly in gold, cash, and other investments. Internationally, Russia had about $375,000 in cash and investments held primarily by financial institutions abroad. On February the 24th, 2022, the day the invasion began, Russia had significant amounts distributed across various currencies and countries. $67 billion in US dollars in the USA, $37 billion in British pounds in the UK, $36 billion in Japanese yen in Japan, $19 billion in Canadian dollars in Canada, $6 billion in Australian dollars in Australia, $1.8 billion in Singapore dollars in Singapore, and $1 billion in Swiss francs in Switzerland. You might wonder how Russia has $375 billion overseas when it was thought to have only $300 billion. Before Western nations could freeze these assets, Russia moved a significant amount out. Thus, the frozen amount totals around $300 billion, with approximately $210 billion of that held by Euroclear in Brussels, a key hub for transferring money. This issue has sparked intense debate over the past 2.5 years. The US and the UK have pushed for all this cash to be transferred to Ukraine to aid in its defense against Russia. But the European Union has adopted a more cautious stance, arguing that the funds belong to Russia and cannot be handed over without a legal basis, especially since they are embroiled in a conflict with Ukraine. So the European Union came up with a plan about the money Russia has overseas. Instead of touching the main stash, they're looking at the interest, like the extra cash that these assets earn every year. They figured this interest is around 300 billion euros annually, which honestly doesn't sound like much, but that's what they're going with. But here's the clever bit. They're planning to use this 3 billion euros to back up a huge 50 billion euro bond. Basically, they're issuing these bonds in the countries holding onto Russian assets, and the money raised will go straight to the Ukraine. These bonds are a bit special because they don't have to be paid back unless the war in Ukraine stops and Russia agrees to pay damages to Ukraine, which many think won't happen. So Ukraine might not ever have to pay these bonds back if there's no clear end to the war or compensation from Russia. Now, while that sounds like a solid plan to help Ukraine, it's kind of like skimming cream off the top, using just the interest and not the principal amount. They're still working out the legal stuff for these bonds, and they're aiming to get everything sorted and start raising the money by the end of 2024. This means Ukraine probably won't see any of that bond money until early 2025 because these things take time. There's a bunch of lawyers right now making sure everything's tight so Russia can't come back later and cause legal trouble, which they probably will try considering their track record. In the meantime, because it'll be a while before any bond money flows, the European Union has already sent 1.5 billion euros directly to Ukraine. This money comes from the interest earned so far, so at least Ukraine is getting a bit of immediate help. Russia's financial reserves are feeling the squeeze for a couple of reasons right now. First, Russia is making less money overall, so it has to dip into its own savings to cover some of its costs. Second, they ramped up their defense spending big time because of the ongoing war in Ukraine. Before the war kicked off, Russia was raking in around 900 million euros a day, that's roughly $1 billion, from selling fossil fuels. Right after the invasion started, this number actually went up because the price of oil and gas shot up, bringing in around $1.4 billion a day at its peak. But over the last 2 years, there's been a big drop, and now they're making about $800 million a day. That's a daily loss of $200 million, or 20% less than what they were making before the war. Add it all up over a year, and Russia's out $73 billion. Looking at Russia's budget for the next couple of years, defense is where they're spending the most cash. In 2024, they're planning to spend 10.8 trillion rubles on defense, up from 6.4 trillion. That's a jump from $70 billion to $120 billion. Social spending, which used to be the biggest budget item, has gone up, but not by as much, from 6.5 trillion rubles to 7.5 trillion. So there's no way less than what's been funneled into defense. Other areas like national security are getting a bit more money, up from 3.2 trillion rubles to 3.5 trillion. But spending on the economy is actually going down from 4.1 trillion to 3.9 trillion rubles, and the budgets for education and healthcare haven't changed at all. They're stuck at 1.5 trillion for education and 1.6 trillion for healthcare. When you step back and look at all these numbers, it's clear where Russia's priorities are right now. The spending on defense and national security combined is 14.3 trillion rubles, which is about $160 billion. That's the same amount they're spending on pretty much everything else in their economy combined. If you look at the annual change in Russia's total spending from 2021, you see some big jumps. In 2022, total spending went up by 17%, in 2023 by around 15%, and the plan for 2024 shows a 9% increase. Now, if you look at the changes in military spending from 2021, the increases are even more stark. In 2022, military spending shot up by 47%. In 2023, it climbed again by 30%, and that's almost a 6% increase budgeted for 2024. This huge difference really shows that Russia is pouring a lot more into its military, while other parts of the economy aren't getting the same attention. At the time Ukraine was invaded, Russia reportedly had about $300 billion worth of assets within its borders. Roughly half of this treasure trove was in gold, rumored to be stashed somewhere in the Kremlin, though the exact location is a bit of a mystery. The other half of these assets are what's known as liquid reserves, made up mostly of the National Wealth Fund. This is basically the cash Russia has on hand to cover any extra spending. If we look deep into the details of Russia's liquid reserves and compare the situation before the war to the end of 2023, the biggest chunks are in cash and investments in Russian companies. There are also investments in infrastructure bonds and various deposits related to Russia's foreign trade and infrastructure projects. The most crucial part of these reserves is the liquid assets, part of the National Wealth Fund. Before the war kicked off, Russia had 8.9 trillion rubles in this fund. Back then, with the exchange rate at 75 rubles to the dollar, this was equivalent to about $119 billion. By the end of 2023, these assets had dropped to 5 trillion rubles. While that's a 44% drop in ruble terms, the hit to its international purchasing power is even more dramatic. With the exchange rate at the end of 2023 being 90 rubles to the dollar, those 5 trillion rubles are now worth about $56 billion. That's a whopping 53% decrease in value over 2 years. The second major category in Russia's reserves is investments in Russian companies, valued at 3.3 trillion rubles before the war and 4.3 trillion now. However, the value of these stocks is more on paper than anything else. Due to sanctions and the exit of Western companies, the liquidity or the ease of converting these stocks to cash has plummeted. Previously, the international investors were keen on Russian stocks, but now, with fewer buyers interested, turning these assets into cash has become significantly tougher. Even though the balance sheet might show that the value of these investments has increased, the reality of converting them to liquid cash is a different story, especially after Western companies pulled out and left Russia holding stakes in various ventures. Russia has taken control of numerous assets and businesses. However, turning these investments into cash, which is something crucial for funding operations or any needs related to Ukraine, is highly doubtful. If we look at the broader context, at the start of 2022, Russia's wealth fund was valued at 13.6 trillion rubles. With the exchange rate then at 75 rubles to the dollar, this amounted to about $181 billion US. By the end of 2023, the total value had dropped to 12 trillion rubles. At the changed exchange rate of 90 rubles to the dollar, this was equivalent to $133 billion, marking a 27% decrease in purchasing power. However, the real pinch comes when you consider what's actually available in liquid form. The various investments Russia counts, like Russian stocks, infrastructure bonds, VEB deposits, Ukraine Eurobonds, and infrastructure project deposits aren't readily convertible to cash. The true available cash, the liquid assets, has gone down by 53% over these 2 years. Bloomberg Economics has made predictions about when Russia might run out of money in its national wealth fund based on how much oil they sell and the price they get for it. If the price of oil drops to $40 per barrel and Russia is only pumping out 8 million barrels a day, their funds could run dry by the end of 2024. However, if they manage to sell oil at $100 a barrel and increase their production to 12 million barrels a day, they could keep their finances healthy until 2098. Depending on how much oil Russia pumps out, their cash could last a few more decades. Regarding Russia's current oil production, there has been a significant cutback over the last 18 months. Russia has announced 2 voluntary reductions, each by 500,000 barrels per day, reducing total output by 1 million barrels per day. There are ongoing debates about whether these cuts were truly voluntary as part of an OPEC Plus agreement or if they were forced by production challenges stemming from the loss of Western partners like ExxonMobil, BP, and Shell, along with the loss of access to advanced technology. These factors are creating operational difficulties at oil extraction sites, complicating Russia's ability to maintain or increase its oil production. Assuming Russia maintains its oil production at around 9 or 10 million barrels a day, a critical factor will be the actual selling price of its oil. Despite the West's implementation of a $60 per barrel price cap in December 2022, Russia has been managing to sell its oil for about $75 per barrel. If the West could effectively enforce this cap and bring the selling price down to $60, we'd have a clearer picture of when Russia might exhaust its cash reserves. Bloomberg Economics suggests $55 per barrel as a realistic price under such enforcement. At this rate, if Russia continues to pump oil at 10 million barrels per day, its reserves would dry out by the third quarter of 2026. If production dips to 9 million barrels per day, the current rate, the funds could run out sooner. By the fourth quarter of 2025, which is just over a year away. It's interesting to note how the scenario changes with higher oil prices. If Russia can sell its oil for $70 per barrel, its reserves might last until the fourth quarter of 2035 or even 2040. At $85 per barrel, the funds could stretch into the 2060s. The critical issue for the West, then, is controlling the price of Russian oil. Keeping it below the $60 cap would significantly accelerate the depletion of Russia reserves, potentially within the next 12 to 18 months. This strategy would pressure Russia's financial sustainability and potentially influence its strategic decisions.